Stick around today because I'm going to tell you about the things that after 38, almost 39 years in business, that I'm going to do in 2025, and it just might help you. So I get this question asked to me all the time: where do you think we're headed? And based upon your history, what are some of the things that you're going to do? So as a student of really successful people, I've always gotten in front of those kind of individuals, and I've asked what I call the provocative question. So in my younger me, I would ask myself, Greg, what are you going to do in 2025? Where do you think we've been to where we're going to go? And what steps are you taking to prepare for a great year in 2025? But first off, let me just kind of explain where I've been over the last 2 or 3 years. We've done this for 40 years now. We've accumulated about 7 operating companies. If I can name them off, they would be in real estate development and acquisition. We're in facility services, which means we manage commercial facilities in probably 20 states and millions of square feet on a daily basis. We do civil engineering for land developers, and we also do surveying and master planning. We've entered into other spaces like landscape and irrigation to service that were big. They just didn't work out at all, and you're going to have that sometimes in a business cycle. We've also got a commercial construction firm that services on the backside anytime we go vertical, that's been in business about 27 years. We've done hundreds of millions of square foot of vertical buildings across the United States. One thing that I did when I forecasted this particular inflationary environment, this really erosion of purchasing power, I knew that there was going to be tremendous headwinds in commercial real estate. So about 3 years ago, we started to develop a proprietary financial modeling, underwriting, and evaluation software called Performa Plus. So that leads me up to today. We have fully launched that. It's available on a subscription basis on a monthly or a yearly plan, and you can learn it in an afternoon. And the reason that we leaned into that is we decided in 22 we were going to try to dispose of most of the real estate that we could at that time that wasn't tied to a long-term fixed rate mortgage. We didn't want to have our pants down over the next few years and know that we would be in a critical situation. So we started disposing in late 21 to early 2022. Even though some others were holding on and they were still in the expansion mode, we were good with it. We wanted to be able to exchange things for 1031 exchanges, or frankly, just get out of the asset altogether and be ready and whole to be able to invest in the coming years. So that's what we did. We took some of those funds and we invested in other businesses. Now, how did I do that? Well, I've always said that a business is only as good as the people that you have in it. We decided that we were going to continue to reset, and we were going to bring in the right people on the right seat and elevate. We're older company, so we had some of those that are more aged that had indicated that their retirement years were ahead. So we decided that at that time we wanted to invest in a younger generation because I'm no spring chicken at 65. At the same time, that's when we started investing in software. We knew that we wanted a business that was scalable. And by the way, that's what we always want. We want businesses that we know that have some form of scale to them. In my personal life, I don't want to be in a micromanagement situation where the company depends upon me to basically produce the revenue. So to me, it's always about franchising a system. In most of the businesses that I have, we've got a period of hard ground to plow, but we're always looking at investing, watering, fertilizing to make sure that we can ultimately get to the point to where we can scale and franchise our efforts. No year is any different. There's no perfect plan because stuff happens and we are constantly hit with a deviation of our strategy. Our ultimate purpose doesn't change, but we do pivot in those areas where we think we need to move forward. The last 2 years, we've been pivoting. We've been investing in people. We've been investing in businesses. We've been holding our cash for what we felt was a timing of the market where we wanted to enter back in. So that's where we are today. We've been rebuilding the organizations from business level. We've increased our space nationally in facility services, which is not as much dependent upon the economy because buildings have to be serviced. We knew that our civil engineering side might get soft because land development was basically constricted because of interest rates. Luckily, we continue to have a great backlog, but we're also in a great geographic area. And we also launched a new business, which we're constantly doing. It doesn't mean we're not focused. We're not in businesses that don't have a direct relationship of creating value in real estate. So we are totally focused in that arena. We don't have manufacturing companies and we don't own restaurants, that sort of thing. Anything that we do, we want to be focused. And I think I've done a video on that in the past. We want to be focused on a particular creation of real estate value. And that's why we've continued to invest in that particular arena. So the software development has been something that we've been working on, basically 10 programmers for 3 years, spent a lot of money on it, a lot of investment, and finally it's out and it is super cool. It's efficient, it's fast, it's very accurate, and it allows the commercial real estate investors to be able to make decisions quickly, accurately, without any circular errors, and also have bank-ready reports. So if you don't know about it, click the link below. I know we've got a free trial going on. We'll be glad to get back with you on that, but it's something that you're going to have. Those of you that are in the commercial real estate business, you need something that you could come to market quickly. Why do I say that? Well, 2025, without question, is going to be a banner year for those in the accumulation phase that have been sidelined with capital. I know I was just recently talking to a friend of mine who raised over $200 million in capital to deploy 2 years ago. He did not buy one asset in 24 months. Nothing continued to pencil out. There was this continual kick the can and reevaluate. Banks were holding on to assets, and now in the first and second quarter of 25, we've got over $580 billion worth of commercial mortgages that have to be refinanced. There's going to be a transition of those to new owners. So what do I think about the interest rate structures moving into 25, and why would I be in an accumulation phase? One thing I believe that long-term interest rates are going to face tremendous headwinds. Well, why is that? It's because they're tied to the 10-year Treasury, not to the Fed fund rate. If you look at Fed fund versus Treasury, a Treasury right now is about 4.65, 4.75, and normally long-term rates are 200 to 300 basis points over that. So as I said a few weeks ago, why are long-term rates so stubborn right now or going up? I know 30-year mortgages right now have ticked up above 7. Well, it's because they're tied to the 10-year Treasury. Well, why are they still high? It's because that the market believe that we're in store for more inflation. So through 25 and maybe early 26, we're still going to face the headwinds of inflation, even though the new administration is probably going to put a lot of pressure on the Fed fund rates to go down. Remember, the Fed fund rates only affect interbank lending and short-term lending, which is boat loans, car loans, or ARMs or credit card debt. That's not long-term mortgages. So you're going to continue to see long-term mortgages well above 6 to 6.5% moving into 25. Predictability says that rates will not get below 6% till first or second quarter of 26. Don't shoot the messenger. That's just where the new normal is going to be. So how can we be looking at the accumulation of assets if long-term rates are at 6.5 to 7%? Well, it's because the cap rates on those have increased, which has eroded the values, and you're going to have banks and individuals, institutions that they're going to have to give their keys back, where they're going to pencil out at the longer term rates that are the new normal. Now, I will not do any deal that doesn't cash flow from day one. I don't buy an asset thinking we're going to have 2 to 3, 4% appreciation year over year. That to me is just the icing on the cake. So moving into 2025, there's going to be a lot of cash on the sidelines still ready for deployment. There's going to be a lot of competition for those things. So you're going to have to work hard, but there are going to be a lot of opportunities in 2025, and we're seeing it right now. So from our standpoint, 2025 is a year of investment. It's a year of increased market share. In the businesses that we do have, we want to continue to work on getting the best people in the seat on the right bus. That's very important for us. As unemployment ticks up, you're going to have more of a pool of people that you haven't had in years past to be able to draw from. You need to continue to ask yourself, do I have the right people in the right seat on the bus? That's one thing that we're reviewing right now. We've got investment of people, investment of businesses. We're trying to make sure that we are squeezing out those expenses to the lowest cost denominator as much as we can, because our expenses continue to increase. I mean, our insurance increased 30% this last year in CGL, property, and all things in automobile, workers' comp, you name it. We've seen a 20 to 30% increase at all levels of our insurance. So we're continuing to evaluate that. Unfortunately, the person that pays it is the ultimate customer. They don't want to pay anymore for the end product, but our expenses rise, so we have to have better ways of doing things more efficiently. So those of you that have businesses, work on your people this year. For those of you that are going into the commercial real estate market, maybe even for the first time, make sure that you have a financial evaluation tool and make sure that you're very cautious going into it. But make no mistake, it's going to be a good year for the accumulation phase to ride that wave back up in the next 2, 3, 4, 5 years as rents go back up. That's a short video on what I think is going to happen in 25. It's going to be an interesting year with the election the way it is, and the pressure of tariffs and other things. But as always, you've got to be ready to pivot on your strategy to take advantage of where you want to go. Reach out to me with any questions. Thank you for joining. Be sure and like and subscribe if you like the channel. And as always, educate, evaluate so that you can ultimately execute to increase your own personal wealth. We'll see you soon.